After over 5,000 hours of trading, losing money, winning bigs and learning from both, I discovered one of the most powerful tools that can change the way you approach the risk management in crypto. It is something that most traders overlook and misuse, but once you master it, it will actually protect your profit, at the same time minimize your risk and maximize your profits. The stop loss method we are going to discuss in today's episode is called trailing stop loss method. Now, here is why traditional method stop loss actually fail. It is actually with a fixed stop loss. Once the market hit the price and quickly goes up your position regardless the market next move. This method works fine if the market goes opposite direction quickly. What happens if the market moves in your favor and then reverse back at the same time? You miss out the potential profits by letting out the trades brief. Traditional stop loss don't allow for market fluctuations that often happen in volatile environments such as cryptocurrency. You are stuck either taking a small profit or not profit at all. So in order for us to actually determine what is stop loss, so this is a trading stop loss chart explained. So a traditional way of stop loss is you just set a fixed stop loss down here and the price goes up. You might need to move your stop loss back to the break even to secure some of the profits, and the price goes higher, you might need to move your stop loss higher again. But so this is so-called trading stop loss that you can automatically do it. So in this case, here is the last traded price. You can see here is the price of the stop, is your cryptocurrency or your stocks. So here is the trading stop loss. So you can actually set how many percent that you will do for your trading stop loss. For example, in this case, I'm setting my stop loss at 7,500 USD, which is 5,000 points from my entry price. And as the price goes up, you can see the stop loss is actually moving up as well. It is also remaining 500 USD stop loss gap. So whenever the price goes up, and in this case, it's starting to draw now. I mean, it started to fall the price, but you can see that your stop loss is remain the same. It means that it's actually calculating 500 USD data points from the highest point to the lowest point. Whenever it is not hit by the stop loss or trading the price, it will not trigger the stop loss. It means that here you already secure the profits because it's already moving your stop loss higher than your entry value. If the price goes up, you can just secure your profit. So luckily, the price reverses back to its original it means higher high. So when the price goes higher high, when it breaks above the point where the highest price actually triggers the trading stop loss again, right? Trigger stop loss again, and the price goes up and the stop loss going up as well until a fixed state and the price started to drop quickly and you will be stopped out by the positions, all right? And your position will be closed. So this is basic or fundamental about trading stop loss. It can be applied for both. You are doing for long, shorts, whatever, you can just use this trading stop loss to do it. Advantages of using stop loss, trading stop loss is very significant, where it is adjusted based on market volatility and you can just secure your position based on what you need, maximizing the profit and at the same time minimizing your risk. At the same time, if you got capture a trend, you can actually use this to capture a whole new trend up there, right? So this is difference between the traditional methods of setting up stop loss. You can say like a two-in-one because it's actually helping you to take profit as well. You might not taking profit at the high, but you might be taking profit at a secure level. Let's see how you can actually apply this concept of trading stop loss in BYBIT. So talking about BYBIT, if you are not registered about any BYBIT, you have not any account yet, you can just use the link down below to register a BYBIT account. So you will receive bonuses as well as reductions of the trading fee when you use my link. Without further ado, let's just dive into the BYBIT. So just imagine you have setting up or registered an account for BYBIT. So this is what it looks like. So you will go to the trades button and go to the futures, and you might select the first pair, Bitcoin USDT perpetual. So just imagine that this is a leverage trading, so it's a high risk. So you might need to further study on how to set up everything, what is the tutorial, what is leverage trading. So you might look this back my BYBIT tutorial and you can learn everything about BYBIT and get started on BYBIT, right? And we'll go to the BYBIT USDT perpetuals contract. So in order to set your TP or trading stop loss, for example, in this case, I'm entering positions now. Just a demonstration purpose, I'm going for long. Alright, just a demonstration purpose. So how you can set up your trading stop loss is you can scroll down your position. So here is your position details. You scroll to the right. So you can see instead of TP and stop loss, you can see they got one thing called trading stop. So this is something that is a trading stop loss works. Alright, you just click add. So you can see they got two buttons here. Retracement means that retrace how many percent. Just like the previous example is retrace $500, then I will stop out my positions. So you can either to choose distance or you can choose percentage. Alright, so if for example if the price move against 2%, then I will stop up. Alright, so you can actually set the activation price, because you might need to trigger a price before it actually trigger the trading stop loss. So this is where you can actually trigger activation price. So for example, in this case, my entry position is 96,000. I want to trigger the price to at a trading stop loss at 98,000, for example. So you just key in 98,000 trading stop loss, and I'm retracement by rate. So I just key in. Once the go back is 2%, then I actually close my position. Alright, then here you go. Just click confirm. Yes. So whenever the price hit 98,000, I will start to actually activate my trading stop loss, and when the price goes against me 2%, then I will just stop out my position. Alright, you can just check here whether it is 2%. Alright, from your entry price to here is actually 1%. So when the price move against me 2%, I will actually stop out my position. So this is how you can actually use trading stop loss to actually set up on BYBIT, and you can start using it as your own stop loss method. Instead of a fixed stop loss method, you can just use trailing stop loss method to actually execute your trade and minimizing your risk. So the trailing stop loss is actually the most powerful risk management I've discovered, and it is actually lets you captures more profit, protect your gain, and avoid getting stopped out prematurely. If you are getting trading stop loss, yet you are leaving money on the table. So start implementing the trading stop loss in your trading strategies today, and thank you for watching for this video. I will see you in my next video.